Hello, everyone. Um, hope you will be fine. So today's our lecture is about the share pool. So in last lecture we have seen about the capital gain tax. So today we will start the share pool. This is a must question in your exam as well. So the pool of shares collects or merged together shares in the same company and of the same type. The pool maintains data relating to the number of shares purchased and the actual cost of purchases. So let's move forward and see an example. So it will be more clear to us. Yeah. Let's see an example. Terry acquired the following shares in ABC PLC. Uh, on these dates, he acquired these shares. So here, if you see in a pool, so purchased January 2016, 12,000 shares, and the value of those shares was 24,000 pound. And then April 2010, again 10,000 shares was purchased and the value was 25,000 pound. We will write it here. And September 2012, 9,000 shares was purchased and the value is 31,500. If we add all these totals, so total is 31,000 and the cost is 80,500. In June 2020, he sold 15,000 shares for 60,000 pound. Yeah. So how we will find out the disposal cost? So the disposal cost we need to find out by using this formula. The formula is number of shares disposed of. So in our case, 15,000, and the total shares before disposal. If you see, the total shares before disposal was 12,000 plus 10,000 plus 9,000 was 31,000. So number of shares disposed of 15,000 and the total shares before the disposal was 31,000. So 15,000 divided by 31,000 multiplied by cumulative cost of pool before disposal. So cumulative cost of pool before disposal was 80,500. Yeah. So in this way, we will get the cost of disposal was 38,952. So here we will say in a bracket minus 15,000 and minus 38,952. So the balance carry forward will be 31,000 minus 15,000. Now we have left only 16,000 shares and the cost is 41,548 pound. The next thing is we have to find out the chargeable gain, yeah, for this 15,000 pound disposal. So the disposal was 60,000 pound and the original cost we just find out by using this formula was 38,952. So it means the Terry made a profit of 21,048 pound. So assessment tip. When you spot a share disposal question, set up the share pool first, then use the figure from that in the capital gain tax computation. Yeah. Bonus issue of shares. Before going to the bonus issue, I have to tell you one rule before that is called the matching rule before we will move forward. Um, so uh, shares are classed as chargeable assets for capital gain tax purposes. Yeah. So to solve the problem, there is a set of matching rules we need to look at first. So anything acquisitions made on the same day as the disposals are matched with the disposal first. So we have to look first in this type of question if there was any acquisition made on the same day as disposals are matched with the disposal first. So we need to match that one. Second is acquisitions made in 30 days following the disposals will be matched with the disposal by matching the earliest acquisition first where there is more than one acquisition. Yeah. So any shares, any remaining shares not yet matched will be matched against shares contained in the share pool. which combines all the shares of the same class in a company. So we will see the example and it will be more clear. So this matching principle we have to look as well. Yeah. So this example we have just done the Terry one, and the next one is bonus issue of shares. So when the company issues a bonus share, so it is like just a bonus. You don't have to pay anything to a company to get these shares. It's just like a bonus. Yeah. For purpose of capital gain tax, bonus shares are treated as though they were received at the same time as the original shares were purchased. Bonus issue of shares. An individual owns, example say, um, an individual owns 15,000 shares worth 30,000 pounds, and the company makes a 1:3 ratio of bonus issue. The individual is given an additional 5,000 shares. So 1:3 means one share for every three that he had already owns. Yeah. If it was say 1:4, so it means one shares for uh, every four share. So if the original shares were purchased in May 2020 and the bonus issue was made in December 20, then the bonus shares would be deemed to have been received in May 2020. Yeah. So because actually the shareholder is not paying anything, so we just assume that when the actual shares was purchased, the bonus was issued, the bonus shares were purchased at the same time. Where bonus issue of shares are added to the pool, it is only the number of shares that changes. The total cost will remain unchanged. As I told you before, you don't need to do anything. The next is right issue of shares. Yeah. So right issue of shares, a right issue occurs when existing shareholders are given the opportunity to purchase additional shares in the company based on their existing shareholding, often at a preferential rate. So again, for matching purposes, these shares are deemed to have been purchased at the same time as the original shares were purchased. They will be added to the pool, and both the number of shares owned and the total cost will be increased because payments has been made to purchase these shares. So let's see an example. Roger purchased shares in Co PLC over a number of years. His transaction in shares with a nominal value of 25p per share were as. So purchase 5,000 shares for £2 each in 2011, and then again 4,000, and then again 2012, and then there was a bonus issue. So bonus issue here 1:5 means so one share for each 5 shares, so he will get a bonus. So we need to add 5,000 plus 4,000 plus 2,250. So we will add this one and we will take this ratio 1:5. So one share for each 5 shares he will have. He will get one additional share. So, and here if you see 28th February, he sold 3,000 shares, and 15th March 2020 purchased 2,000 shares again, and June 2020 sold. So now calculate the chargeable gain arising on the disposal of 2,000 shares on 30th June 2020. So we need to find out the chargeable gain for 30th June. Let's solve this difficult example. So here, everything we need to write here in a pool. So 12th May 2011, 5,000 shares was purchased. So 5,000 multiplied by 2 is equal to 10,000. Then 4,000 shares was purchased, multiplied by 220, and we will get 8,800. And right issues, 2,250 multiplied by 2.10. Yeah, and 4,725, and the bonus issue 1:5. So we need to add all these shares before the bonus issue, and then 1:5 ratio we will get 2,250. So the cumulative is now 13,523,525. Here if you look, 28th February 2020 sold 3,000 shares. So the disposal on 20 8th February needs to be matched according to the matching rule. No, this is the matching rule that you have to look that I discussed before. It is easy to understand with the help of this example. So if you look here, it first needs to be matched against any acquisition against in the next 30 days. Therefore, 2000 of the shares will be matched against the acquisition on 15th March 2020. So it means that this leaves 1000 shares to be matched against the pool. So here is the answer now. So how we done this one? If you look here, sold 3000 share and 28th February and then purchased 2000 shares. So 3000 minus 2000. So actually they sold 1000 shares. Yeah. So we need to match this one. So 1000 shares multiply by what was the price it was sold? 2 point. So we need to multiply by 2.25. Yeah. So 2.25 the purchase price. So we will get 1743. Yeah. So this disposal. So cumulative total we will get it here. No. So sorry, this 1743. No, sorry, it does not come like that. We need to write the formula that we used before. So this is the formula here. Just a minute. Let me show you the formula here. So this one, if we need to do note 23525, yeah. So how much the disposal is? 1000 divided by 13,500 multiplied by 23,525. So we will get this cost of disposal 1743. Yeah. So the total shares we have now 12,500 and the value is 21,782. And 30th of June 2020 we disposed 2000 shares. So we need to find out the cost of this 2000 share. So the cost we will find out 2000 divided by 12,500 multiplied by 21,782. We will get the cost 3485. And now we need to find out the chargeable gain for 30th June. So it should have to be 2000 shares multiplied by 350. We dispose proceeds is 7,000 pound and the original cost was here 3485 and the capital loss is 3515. Yeah. So this is the end of our topic today, and hopefully you have learned something new. If you like it, please subscribe our channel and like it and share with your friends and families, and we will come with the other videos soon. Thank you so much.